let's get straight into it, because it seems that this week so far has been a good one for the NSE, and the market's gaining, pushing through 3-month highs. What are you making of the current market activity we're seeing?
Well, thank you very much. Just like you observed, you're seeing very, very positive sentiments in the market. As we are closing the month of February, the corporate actions that are coming through are very positive, which is a very good indicator that the NSE is going to be able to start picking up going forward. And also, even looking at the macroeconomic front, we are seeing inflation levels also coming down, which is also increasing level of disposable income. So we should be seeing a bit of more better sentiments, especially in terms of how the NSE performs.
Looking at one of the factors that has come to bear on the NSE's performance, it's been inflation. We've seen inflation data filtered through this morning, Samuel, and that year-on-year inflation rate falling back today. What do you make of that number sitting at 16.69% for the month of February?
Very good move in terms of how the disposable income of most investors is going to become, and also in terms of purchasing power, because inflation has been a major concern. I guess looking at food prices, which had also been very high, fuel prices, which had also been very high, and also other factors like foreign exchange, which had been a bit unstable. Seeing the government coming forward in terms of bringing some bit of stability, and even thinking about borrowing from outside so they can be able to reduce their local borrowing, is going to be able even to have an impact on inflation as well as the interest rates. And hopefully going forward, we should be able to see a bit of activity in terms of how companies perform, and even in terms of how the economy grows. And hopefully going forward, you should be seeing very, very positive sentiment, especially in terms of the GDP numbers.
So looking at where the shilling is sitting at just under that 83 mark right now, and looking where inflation has managed to pull itself down to, what do you make of the CBK's interventions that we've seen thus far this year, and the kind of moves we've seen in interest rate activity? Where are your confidence levels sitting at this moment?
Well, looking at it in terms of how the central bank has come through, for once we've been seeing them being very, very vigilant and very positive in terms of how they're able to look at the market as well as control how the situation has been. And looking at it in terms of how we closed last year, there was a lot of concern in terms of how central bank was going forward and how it was controlling things like the central bank rate. But looking at it in terms of how the market is already behaving right now, the situation is unfolding very positively, and hopefully, if at all the shilling is able to be stabilized as well as the inflation levels are going to be within controllable margins, we should be able to be seeing very positive sentiments going forward.
Let's drill down into results that have filtered through to from corporate Kenya. Samuel, Kenol Kobil, one of those companies, profit up 74% to 4.9 billion shillings. Those figures coming through after the closing bell in yesterday's session. Your anticipation of those numbers, or your expectations of those numbers, have they been met?
Well, looking at Kenol Kobil, basically the company has been very strong in terms of performance, and particularly their earnings for the period that we are discussing. Basically, it looks like their positioning, especially in terms of the region, has favored them very well, because some of the returns we are seeing them coming through are being able to come through because of what they're able to take advantage of in terms of their positioning in terms of the region. But also the earnings is very, very positive and also very good, especially noting there's instability that we saw in terms of the crude prices over the same period. They're able to really hedge and position themselves very well to be able to perform so well. I guess the only concern would be their dividend payout, which is not as good. I guess maybe they are also preparing themselves for the challenging times that we are still not yet through with.
Looking at the kind of reliance that's now placed on East Africa as a region, as opposed to sales in Kenya itself, what are you making of the strides it's made in broadening its African footprint?
Well, looking at it in terms of their regional setup as well as their regional strategy, well, looking at Kenol Kobil in particular, we've seen them being very keen in terms of taking advantage of some of these undeveloped regions that are already there, countries that are coming up like Burundi, Rwanda, and such other segments of the economies that within the region that are very, very promising. And looking at it going forward, especially looking at seeing things like the pipeline which we're working towards developing, and also connecting some of these countries that are coming up like Southern Sudan, it's very well positioned for them to be able to take advantage of the opportunities that could still be arising. And also looking at it in terms of their operational efficiencies, we are seeing them being very keen in terms of expansion. They're not expanding so much such that they're not being able to control, especially their bottom line, which is very, very positive.
So a very positive sentiment, it seems, you hold for a stock like Kenol Kobil. This is a stock that's rallied, 37.4% over the past 12 months. Just how much more upside do you see there being in the share price?
Well, looking at it in terms of the numbers that are already coming through, definitely they're going to be doing very, very well. And hopefully, now that we've seen 2011 go by and 2012, as much as it's a bit challenging, it looks a bit more stable, because most of the fundamentals that we are seeing looking a bit shaky last year are looking a bit more stable going forward. We should be seeing the stock price continuing to rise to the range of 12, 13 shillings.
And we had KenGen out with numbers as well. That company reporting profits up 33%. What did you make of that headline number to start off with?
Well, KenGen, basically those numbers are very positive, especially observing that last year we saw a bit of a challenge in terms of things like crude prices because of energy generation, as well as rains had become a bit of a concern. But the last 3 months of 2011, we saw rains coming through, and that has really boosted their hydro performance. And also looking at it in terms of their expansion, they're still being able to report a bit of profits, yet they're still doing a lot of capital-intensive projects, which definitely is affecting their performance. Looking at it in terms of even their financing costs, we saw them going up over 100%, which is something that's a bit of a concern for them right now, but hopefully they'll still be able to manage their financing as well as keep the shareholders happy. I guess the only concern right now is that the fact that they did not announce any interim dividend, and I guess that might still affect how the investors perceive the stock.
As you say, yet another interim dividend not being declared, and that as the company focuses on increased capital spend towards funding future power projects. On the other hand, though, there's one negative that seems to stand out for this company, and if we have to lay criticism on a company like this, it's the kind of reliance it has on hydropower. Samuel, what's your view on that, and are you as critical? Because, of course, being reliant on hydropower means that your earnings go which way the weather does.
Well, definitely, just like you noted, for a country like Kenya, which seems to be very, very agricultural reliance as well as rainfall reliant, looking at it in terms of how the performance has been, especially in the last several years, it has been very unreliable in terms of the rains. And looking at it in terms of the energy generation, definitely that's an area that we need to seriously consider. At around 1,000+ megawatts for a whole economy, it's a bit of a concern, and you're hoping to be able to really grow that. For KenGen, we've been seeing them trying to shift to think about geothermal, which is also very positive and good. But I guess the challenge that we are seeing in terms of geothermal is a capital-intensive nature of it, and also the aspect of the fact that it might take a while before we're able to see that. But hopefully, maybe going forward, they're going to slowly start shifting from hydro, because hydro definitely, just like you observed, has been very, very challenging in the recent past.
Two companies that have been holding back on their dividend. On the flip side, we had BAT issuing a very impressive dividend, and we saw price action on that share price, resulting in that BAT share price hitting a record high in yesterday's session. Samuel, just looking at BAT, what are your forecasts for that share price to move higher? Because we're sitting at around about that 320 mark, being pegged as a key resistance level right now.
Well, looking at BAT, definitely one of the things that are very keen about that stock is that for a very long time it has constantly been a very, very good dividend-paying stock. I guess the only concern was that at some point we were a bit keen on seeing that the stock had already matured. But looking at it in terms of BAT, especially their strategy in the last few years, we've seen them shifting towards export, and that definitely positioned them very well last year when we saw the shilling weakening, because they were able to make quite some good gains on that front. And the good thing about BAT basically is the fact that they have really sustained that momentum in terms of the dividend payout, and definitely the demand on the stock is already an indicator that most investors want to buy into the stock so that they can be able to take advantage of the dividend. But looking at it in terms of the share price, I must admit now it could be at a resistant level, because it's at an all-time high, and 20% rise on a stock whose par value is 10 shillings is a bit high, noting that it's also not very liquid in terms of availability.